Most people lose money trading, but it's not because they picked the wrong trade setup. They lose because they have no plan. They have no plan for where to take profits, and more importantly, no plan for when the trade setup goes wrong. And if you're sitting there thinking, I don't trade, I just buy and hold, stay with me for just a moment, because what we're talking about here is completely optional. In the DeFi carry trade, you never have to trade to do well. The whole point is you actually get paid when other people trade. But when a genuinely high probability trade setup appears, this is the kind of thinking that can turn it into extra income without gambling. See, every week we do a 2-hour strategy session for our accelerator members. And last Thursday, I walked our members through an ETH trade setup from start to finish. It was what I call the weekly side quest. Over the next 13 minutes, you're going to get to see exactly what our members see every week. I'll break down the Elliott Wave setup that I spotted, the Fibonacci retracements that allow us to pick our entry points, and the Fibonacci extensions that allow us to plot out our profit targets in advance before we even enter the trade. But here's the interesting part. This trade is still open as I record this. We opened it last week. We already hit our first target and banked some profits. And now we're letting the rest of the position run towards those higher targets that I lay out in this very clip. So this is your behind the scenes look at our 90-day accelerator program. The analysis, the deep thought, and yeah, sometimes the trade setups that our members get. No hype, no guarantees, just the actual work. I hope you enjoy it. So this week's side quest, probably take longer than 10 minutes on it, but I wanted to revisit a little bit Elliott Wave analysis as well as Fibonacci retracements and Fibonacci extensions. Let's look at the basics of Elliott Wave. So Elliott Wave theory says that the market moves in waves. So the market moves in 5 waves up. That's called an impulsive move. And then it corrects back down in a 3-wave pattern. So 5 waves up, 3 waves down, and then continue. And it is a fractal analysis pattern. A Fibonacci retracement is when you have a corrective move, you get a rally, you get the 5 waves up, now you're getting to 3 waves down. How far down? How much is the retracement? Quite often, you'll see these retracements finding support at a Fibonacci ratio 38.2% or 61.8% or simply halfway back, a 50% pullback. This is so-called golden pocket. Right there around the golden Fibonacci ratio is the 61.8% retracement. That's the most commonly occurring retracement in the way that markets move. And then Fibonacci extensions allow us to not predict, but to come up with certain targets of where this wave structure could end up going. I'll show you guys on the chart what I saw and what I'm hoping to see now that I'm in this long position. Let's go to ETH, to the 5-minute chart or 15-minute chart. First thing I want to talk about is this rally right here from the early Saturday low at 1505 all the way up to the Sunday night high. That was part of the reason why Sunday's close was above the 200-week moving average on Bitcoins, because we got that nice rally all weekend long. So first of all, what's the Elliott Wave structure of this? Let's count it out. This is a 5-wave pattern, an impulsive pattern where the market rallied. We got a wave 1 up and the wave 2 and 4 are correction waves. So here's the wave 2 correction, and then we bottomed out. It hesitated a while, and then we've got a nice strong rally into, this was the wave 3 rally up. Wave 3 is typically going to be the strongest wave in the bunch. I mean, wave 1 and wave 5 are also rallies, but typically wave 3 is the biggest, most powerful rally of the pattern. I believe that holds true. We can measure it just to make sure. What we had there was 112 points, and then the wave 5 rally pretty much equal, 116, 112, close enough to, like I said, wave 3 not being the biggest wave, that doesn't invalidate the pattern, but the structure is really nice, and especially this wave 4, very clear 3-wave correction, A, B, and see into the bottom of this wave 4 correction, and then the last wave higher right there. So nice Elliott wave structure on that. The other thing I wanted to show on this is the Fibonacci extensions. Oh, maybe I deleted it. I'll just redraw it. So the way we do Fibonacci extensions, everything is based off of wave 1. You see a 5-wave pattern, or you see the beginning of what you think is going to be a 5-wave pattern, and you measure that first wave. You measure wave 1, and then you anchor that measurement at the bottom of wave 2. And let me fix this. This needs to be right at the bottom. Okay. So this first move is the measurement, and then we anchor that measurement at the bottom of wave 2. And these lines here can be used as target levels. When you have a 5-wave Elliott pattern, wave 3 typically is going to go beyond a 1.0 extension. So what that means is that the size of wave 1 as measured from the bottom of wave 2, that's the 1.0 extension. So as this wave 3 is playing out, you can even see there was a little bit of temporary resistance right there at the exact 1.0 extension. That's called a measured move when you have an ABC where A equals C. But then we blasted through and went higher and basically almost reached the 1.382 extension. So 1.382, you'll recognize the Fibonacci ratio in there, the 38.2. This is where wave 3 typically will end somewhere around there. Then you'll get your wave 4 pullback. And then depending on the strength of the pattern, your wave 5 will typically go up to the 1.618 extension. If it's especially strong, it can go to the 2.0 extension. So by the time the pattern is finished playing out, this is a very strong pattern because it reached 2 times the distance of wave 1. Again, typically the 5-wave pattern will end somewhere in the vicinity of the 1.618 extension. Here it was a little extra strong and it made it all the way to the 2.0 extension. So I like the look of this. The 5-wave structure is very clear, and I like the dimensions of it. It did what an Elliott wave pattern is supposed to do. In fact, it was a little extra strong for the typical Elliott wave structure and the typical impulsive rally. They aren't usually this strong. They can definitely be. Sometimes they go even beyond the 2.0 and go to the 3 extension. So I like that. So that's the first part of my trade setup. I see this. I recognize an Elliott wave pattern. I recognize an impulsive rally on the chart. Weeks and weeks of selling. Finally, we hit what I think is maybe a capitulation low, a bottom, and we rally out of that. We come charging back. This is the beginning. This is step 1 of a trend reversal pattern. You have to start somewhere. It's going down, 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 down. Sometime it's got to stop and reverse and start going the other way. That starts with an impulsive rally like this. Now, what do we look at next is we have the first part of our trade setup. Now we know we want to get long, but we want to patiently wait for a little bit of a retracement. This is a fractal system. So this 5-wave pattern is just wave 1 on a larger time frame. So from here to the top, it took place in 5 waves just like it should, but the entire impulsive rally can be considered one wave. It's a wave 1 on a higher time frame. So after wave 1 comes a wave 2 correction. You want to see a gentle movement back down, but not all the way back down. Typically your retracement, your correction is going to fall into that Fibonacci range, that golden pocket, so to speak. So the next thing we want to do is measure the Fibonacci retracement. There it is. So we measure the full rally, and then we're looking for a correction somewhere between the 38.2% and the 61.8%. Now again, how far it corrects reveals the strength of the overall setup. If it corrects all the way down to 61.8%, it's good, but maybe it's not quite as strong of a move as you would hope. If it only pulls back to the 38.2% retracement, that indicates a stronger, more bullish sentiment. Elliott Wave and Fibonacci, it's all about measuring market sentiment. That's what makes the price move. It's how does everybody around the world feel about this market and this price, and are they bullish or are they bearish or are they indifferent, and what are they doing about it? And that makes the price move. So if you can measure and examine the sentiment, you can make high probability predictions about what the price is going to do, and you can trade it. So that's what I'm doing here. So the retracement ended up being, so far, a 50% retracement. So it's not deep, it's not shallow, it's right in the middle. I like it. It's a halfway back retracement, 2 steps forward, 1 step back. Now comes the next leg higher, right? That's the thesis. So to be honest, I was hoping that we would get a little deeper on here, and it just wasn't happening. And the sellers tried to make it go lower. They failed. They tried again. They failed. They tried a third time, and they failed yet again. So this pattern here, this little chunk of price action, to me, that says that the sellers they don't have the strength. The negative sentiment just isn't there. This thing wants to go higher. So right here, as we started to pump for a third time, roughly off of that same level, that's when I executed the trade. I said, the correction is done. We've had a nice wave 1. We've had a wave 2 correction that appears to be done. Next comes wave 3, which again, wave 3 is usually going to be the largest, most powerful part of the overall 5-wave pattern. So that's where we are. That's where we were as of last night. And I went ahead and executed the trade. I bought in at about 1640 right in here. And so far, so good. Coinbase had a little bit of a data issue just before the call. I don't know why it's missing the data from there to there, but the data is complete on my GMX screen here. And you can see we got a pullback there. So I was in the money, a little red for a little bit, and then it launched higher. Now, if this trade setup and this pattern plays out, what would we expect? What would be the next move? Well, we had wave 1 and wave 2. So now comes wave 3. So we can use that same Fibonacci extension tool to make a prediction as to what are our upside targets? How far might this rally go? And this is really valuable because one of the most difficult things to do as a trader, or just a swing trader or an investor, one of the hardest things, sounds easy, but one of the hardest things to do is to let your winners run. Cut your losers short, only lose a little bit of money when the trade setup doesn't work, but then make a lot of money when your trade setup does work. So you let the winners run. So you want to come up with some kind of a target though, to where at least you're going to bank some profits on part of the position. You guys know what I like to do. Didn't have the opportunity this time. I like to scale into my positions, and then as it goes my way, I scale out. I take profits, but only on part of the position, and I allow another part of the position to keep running. Okay, so let's plot the Fibonacci extension on this pattern. Let me turn this off. It's this tool right here, trend-based Fib extension. It's available under the third menu item on TradingView right there. And we have to draw 3 points for this. So we're going to measure the wave 1 rally, and then we're going to anchor that measurement at the bottom of wave 2. Now, this might end up being just a bear market rally. In other words, maybe this rally will run out of steam and the big higher order downtrend will continue. Even if that's the case, at a minimum, my target on this trade is right there at the 1.0 extension. So about 1817, this is where I will look to take some profits. This will be a potential resistance zone because this might just be a correction in a downtrend. Remember, correction is 3 waves, A, B, C, and quite often the A leg is equal to the C leg. It's called a measured move. You measure the first move and the third move is the same measurement. So that would be the 1.0 extension. This could potentially be just wave A, this is wave B, and wave C goes to the measured move, and then it runs out of steam and down she goes. Okay. Okay, so I will be looking to take partial profits right there at the 1.0 extension. Now, if I'm right, and this is the beginning of a reversal, and this truly plays out as an Elliott wave structure and a rally, then wave 3 will go beyond the 1.0 extension. That's kind of like the definition that third wave should be stronger than the first wave. It shouldn't be equal to the first wave. It should extend beyond the strength of the first wave. And so my next target would be the 1.382 extension. So bigger than wave 1 by 38.2%. Again, the Fibonacci golden ratio comes into play here. So that would be a potential target for perhaps just wave 3 or maybe the entire pattern. But I definitely want to see this next wave extend to at least the 1.0 extension. I will take some chips off the table if so, and then look for the rest to try to take some profits at the 1.382 and then the 1.618 and maybe even the 2.0. We'll see. That's probably asking too much for this first rally of a trend reversal, but we'll have to see what happens. So that's the kind of analysis that our members get every week. But here's the thing, trading is just the side quest. The real engine is generating daily cash flow from the crypto you already hold. If you're holding a meaningful amount of crypto and you've just been sitting on it, watching it go up and down, but not earning anything from it, there's a better way and you really need to speak with us. When we're on a free one-on-one strategy session with you, we'll take a look at your assets and we'll lay out a plan for you to start generating that daily cash flow from your crypto without selling and without triggering capital gains tax. Click the link below and book that free call. Thanks for watching. I hope it helps. Like and subscribe, and I'll see you on the next one.